Everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on May the 25th, 2022 with a Forex trading and cryptocurrency market analysis. So we are going to show you our disclaimer real quick just to remind you that our webinar is for illustrative and educational purposes only. And if you haven't done so already, please hit the subscribe button on our YouTube channel or Twitch channel. You can check us out on Discord as well. So, and also check out the book, High Probable Japanese Candlestick Patterns, written by yours truly, available on Amazon.com in paperback and Kindle versions. All right, now let's go to our live action screen here. And we have the forex-trading-unlock.com website pulled up. And if you look from our navigation bar here, products, courses, and services, you can click on the High Probable Japanese Candlestick Patterns page, and it will actually have a little video about it, and it will also have a little thing showing you the book, and you can buy, share, and preview. We would prefer it if you buy it, but also share it and preview it as well. And also you can always go down over here in the right corner and you can hit like Twitter or Facebook, and you can hit out a little tweet just like that, and that'll help give us a little promotion. We would really appreciate if you would do that. Alright, so that was our little plug for right now. Alright, we go to our market analysis and education tab here and hit the workstation tab. We don't need to watch the ad there. And we're going to toggle down. We're going to go past the numbers for the day and stuff like that. And we're going to go straight to our chart here. We're going to click off this. We don't need those symbols. And we'll get rid of the volume. Alright, so what do we have shaping up here today? Well, we have a very interesting reversal of fortune. You can see that as of today, the market is reversing off of the higher move highs from yesterday. We've been trending higher for the past couple weeks. We set a nice low back in mid-May, and interestingly enough, this 3-day pattern that was completed here, we had the down day here, we had this first up day followed by the second up day. This here is called a 3 inside up buy signal. This signal had occurred back on May the 16th. Okay, so May the 16th, when this had occurred, we had the initial daily buy signal. Now, interestingly enough, we had a buy signal that also had occurred on the weekly for the Euro US dollar, and that's when we ended the week last week, and we'll get into that in just a moment. So simultaneously, we have these multiple buy signals that are coinciding with each other. Now, you have to be mindful of the fact that the trend for the most of the currencies versus the dollar has been down. The dollar has been a very strong bull. A lot of that is related to, the interest rate policy that's going on with the U.S. Central Bank, with the Federal Reserve. And we know there's going to be a continuance of this aggressive rate hiking for the rest of the remainder of 2022. At least that is the forecast and seems to be the stance by the Fed. There are Fed minutes today. Be mindful of what they have to say. I don't expect to see any great type of change, if you will, in their speak. I would think that most of all they're going to maybe start to admit more about the fact that inflation does exist right now. Remember, they said they're going to raise rates to help curb inflation, but the reality is they're behind the curve on everything that they've been doing for a very, very long time. And it's not just a few years, it's decades actually. So we are way behind raising rates. We should have been doing it years ago. We should have been doing it 6-7 years ago. This goes way back for sure. We should have been doing it to get them at a more normal nominalized rate. So that way in a situation like today where we have high inflation, where you don't raise rates to cut inflation, not when you have it because of the reasons that we do. So we should be cutting rates, not raising rates right now, but we can't cut rates because we're at the bottom. So, and also now we are behind the curve, so we have to get things to where we can manage things in the future, hopefully. I think what they should do is do an aggressive rate hike beyond what they've already been doing, but that's just me. All right, so interestingly enough, so we have this 3 inside up buy pattern here. Let's take a look at the weekly. And if we pull out just a little bit, there we go. So last week we had a bullish engulfing line buy signal. So both of these are high probable Japanese candlestick patterns. that you can learn how to trade, especially if you read my book, High Probable Japanese Candlestick Patterns. So we're going to see how these patterns have been evolving and see whether or not we can still capitalize on them. Remember that currently both of these bullish signals are counter trend signals, okay? So be very mindful of that. Remember that you are going against the trend. Right now we've been making lower move lows, lower move highs, and the reality is that we're most likely going to continue to do so at least for the next, I would say, few weeks to few months, because there's no reason to think that we will change this outlook as far as with the Fed and certain fundamentals that are driving things. Now, yes, we have the war in Ukraine and other things that are active in this, and we're going to cover that as we get through the analysis. Okay, so by the way, if you have any questions, leave the questions on YouTube or on Twitch, or even on Discord, which now we have, because of you guys said you wanted me to be on Twitch, so now we got the stuff on Twitch for you. Alright, so, alright, let's see what we got going on here. Let's paste this in here. I'm going to put the link in the Discord thing here for you guys. We have on the chat, if you have any questions here, we got couple of people that just signed on. We don't have many followers yet on Discord, so any of you that are out there in Twitch and YouTube land, check us out on Discord. I'll put the link on that in a little bit. All right, so Euro US dollar, let's see what kind of a retracement we can look at. If we take the last major swing high to this current major swing low where we have our buy signal, which is also, remember, a low on the weekly as well as the daily, obviously. So we have this nice little correction, and where did we go? So far, we haven't gotten all the way up to the 50% mark, let alone the 0.618 mark. Now, as far as if this is just a corrective move, we don't expect this market to get above 108.62. We do have a key swing high right here that could get in the way of things, and we believe that this is going to fall short if it may not be doing so already. So we've had a nice run up in the euro. We've had a nice run up in most of the currencies against the dollar, especially the US dollar yen, which any of you that follow me know that I've been long that market for a very, very long time, and obviously over the past month, or half a month for sure, I've been taking a lot of heat as it's corrected back $5 off of the highs. So, and I've been net long for literally since last summertime, no lie. So for transparency, yes, I am still net long US dollar yen. I've been whittling in and out. I took a little heat back off on a lot of profits that I had, and now I've readjusted a little bit, and I don't know, we'll see how things go. The fundamentals still are in my favor. We'll get to that in another couple of markets. All right, we have a couple more people joining us on Discord. Hope you guys are paying attention here and getting the full video here. I'm not sure if you are or not. Let's see if maybe you are. Okay, I think no, I don't need the video. Maybe the video is not proper for that. I think you just need the screen. There we go. Okay. All right. That should be good. All right. Cool. All right. I think we got a good thing going here on Discord. Sorry, this is a little bit new for me, folks. Bear with me. Integrating Discord into this is something that I am not really familiar with. All right. So we do have a potential sell signal forming today in the Euro US dollar. So key off of yesterday's high, this is very critical. It is just below our 50% line here. So this is a heavy resistance area when you look at yesterday's swing high. If we were to settle right now on the day where we're at in front of the Fed minutes and what have you, let's say it was already 3:30, 4 o'clock, and the stock market was closed in the United States, meaning that all the markets around the world have cycled through their day. We're getting ready for Thursday the 26th, and the Forex rollover into the following session. If that would be the case, we would have a short-term sell signal. That would be a new bullish or bearish engulfing line should it close as it is right now. So this is something you want to be mindful of. If we do so, I would expect that we will have a little bit of follow through to the downside going into in front of, remember, a U.S. holiday 3-day weekend. Not for the rest of the world. Currency still open up on Sunday, but you have suspended trading hours for the United States on Monday for the stock market and the futures markets and all kinds of other markets. So there's going to be, expect a little bit of some quirky action as markets do come back online globally on Monday night, or Monday afternoon. So in the United States, as far as electronically. So I would expect some crazy volatility. This is the kind of market where if you're not in a position already, I would stay out of it. Should we close today, you would have a nice sell signal, whatever the close is today, with a few pips above the high from yesterday. That would be your risk level as a short for the remainder of the week. Now, as far as how far can we go as far as a sell signal, well, if this is a valid sell signal and we start to slide, the reality is that we're coming off a lower move high. So our trend has been making lower move lows and lower move highs, and if this sell signal here becomes valid today, which remember, we are not saying that it's happened yet because it has not happened yet, it is forming. But should this occur today and settle like this, we are expecting to have the market trending lower for the next few sessions, and then come back at least, I would say, down to probably about this area right here on the 50%. Let's say that the bulls are really here and we're starting to form a bottom, okay? What I would expect is that we have, at the most, a pullback into this area right here. So let's say that, for instance, that we are starting to round out a bottom here, and we are going to have just a little bit of a buy down area before we explode to the upside, hypothetically speaking. Then we would expect to see a test of support down to this 105.51, 104.99, basically 105 even area. This should be the extreme, because if we get below here, we're coming off a lower move high and we're starting to make lower move lows on a daily basis that start to take out previous swing higher move lows, especially on this correction. Because remember, we came down here, here's the low. We came up, we made a lower move high, we fell down here, made a higher move low, sprung up here, made a higher move high. So the question is, if we bounce here and come back up, that would be a higher move low, which would mean we'd be in a neutral territory. That means the short-term trend would no longer be bearish. Now, the long-term trend is obviously bearish. The medium-term trend is bearish. Short-term trend is right now, hourly, it is well, now it's starting to turn from a bull to a bear. Daily, we have not become a bear yet. We are still a bull. Okay, so now we could still come up and rally up beyond the swing high from yesterday and challenge this area up here at 108.62 to 109.37. However, we do have a little issue with that one. So if you follow the bonds, which you should, the bonds in the 10-year, you go to the CME website, you go down to the interest rate table, and you will see that right now this is all in delay. Right now they're down 6 ticks. Remember, futures go by ticks. They were higher on the day earlier this morning. Now they're lower. This is significant. As Treasury bond markets go down, interest rates go up. That means that gives strength to the dollar, which would weaken the euro-US dollar. So if there's anyone that has any questions about this relationship, it's very important that you pay attention and be mindful of it, because it's very helpful in getting you to be on the right side of the trade. So as the Treasury market starts to sell off, and if it continues to sell off, and we have then we have a sell signal here in the euro-US dollar, that kind of reinforces the fundamental aspect that dollar strength is coming into the market. Not necessarily euro weakness, but we already know the euro is weak. That's why this market's trending lower. The euro-US dollar is not in a bear market because the US dollar is so strong. The euro is in a bear market because it's got the Russian-Ukrainian conflict, the energy crisis they now have because of sanctions on Russia, and the fact that their economy is crumbling because almost 30% of their exports go to Russia, and now they are shutting the door on their own exports, closing their own factories in Germany and other countries throughout the EU. There's a lot of unrest. The EU will tell you that they're doing what they believe is the right thing for there's their own collective unity. However, sovereign countries within the EU, which are technically not sovereign anymore, they're starting to get the jitters, especially countries like Germany that when it comes to inflation, that brought on a world war, and they've always been anti-inflation and done everything in the world possible to restrict that. And because of the EU, Germany doesn't have that power anymore. They're the driving engine of the EU, but they do not have the power to control their own destiny. And right now, I promise you, the Deutsche Bundesbank would not be going with the ECB whatsoever if it wasn't for the fact that they are part of the EU. They would not be doing what they are doing right now. Absolutely not. They would be defending their currency, and to be quite honest with you, with the Ukrainian-Russian conflict, they would be a little bit more off to the sidelines than they are right now. They would be involved, but they would not be leading the charge second to the United States. And that's something I would be very mindful of as far as the fundamental bearishness for this trend. So the sell signal now becomes a trend signal. You remember, the trend is your friend. So right now, not only is it a low risk sell because we have the sell signal, we're coming right up against heavy resistance, it also goes with the trend. This would set us up to be locking in a lower move high. That lower move high would help to maintain and support the trend lower and give us a good idea of not only coming down to test 105 or 105.50 to 105 even, but to actually come down and take out the lows from a couple weeks ago. Like, parity is in the puzzle right now. It's definitely going to happen. Like, this is not an equation that's forming. It's a puzzle where the pieces are all right there and they're starting to come together. And guess what? Parity is going to happen. US dollar Swiss already hit parity. The fact that that hit parity before the euro is shocking, except for the fact that we know now that the Swiss is no longer a neutral country, which means that I would say that the flight to quality value of the Swiss franc is completely destroyed. And over the next couple years, I would expect to see their banking system start to have a lot of problems because a lot of big money is going to start pulling itself out of Switzerland, period, and it will not return definitely for decades. What's happened over the past couple of weeks, let alone past couple of months, the Ukrainian-Russian conflict, it doesn't matter about what side you're on. Switzerland has always remained neutral. The fact that they have not done so and they are working with sanctions against Russia, and I'm not picking sides. I don't think this is not about that, but it's about the reality of what Switzerland is and how they function. They have destroyed their credibility. That is probably why you're going to continue to see the Swiss lose ground to the U.S. dollar, because it is a flight to quality currency. It's just not anymore. There's no reason to trust it, because you already know that if they turned on the Russians, who is the next one? They set a precedent. They've said that they will go with a flow of a certain narrative around the globe. So that changes everything. All right, so now let's see what's going to happen as we wait for today's close, and then we will have our sell signal that targets this 105.5 to 105 even minimally. You have the risk level. As far as being a bull, if this market turns around and doesn't sell lower, let's say that it settles just a slightly lower on the day, or let's say it turns around and rallies. Remember, you got the Fed minutes. Anything could happen. If this market rallies up and settles higher, making higher move highs on the day, you can forget about this 105 even to 105 half area, okay? Just pay attention to that. Remember, this is if the sell signal occurs today. So we have a very nice setup. We have our initial buy signal here, 3 inside up. Remember, you can check that out in the book High Probable Japanese Candlestick Patterns. This is one of my favorite buy signals, to be quite honest with you. Excuse me. It's a very reliable buy signal, and it's also a sell signal in reverse. That's also in the book. It explains it, and it explains what your risk needs to be once you place the trade and what your expectations for upside or downside targets would be, whether it's a 3 inside up or a 3 inside down pattern. If you like what you're hearing, or please put a little like on YouTube and Twitch and send it out to your friends, this video, and also check out the book, High Probable Japanese Candlestick Patterns. And if you got any questions, leave them on Twitch or YouTube right now, and we will get to them as we are going through this video. And, I appreciate a couple likes there on YouTube. You guys are awesome. That's fantastic. And Discord, too. We got a couple more. We got some people now following us on Discord. What do you know? In fact, let's see. Okay. All right, that's that. All right, now let's go to the British pound US dollar. British PUSD. All right. All right, British pound US dollar. So this one yesterday had already started to struggle with the top set from the prior day. So this one was ahead of the euro. It already started to turn negative yesterday. Today it's positive. So does that mean that we have a little bit of indecision or divergence going on in the EU and the European region? Possibly. I think that one of the things that really is kind of making the pound US dollar a little more neutral than bearish like the euro is the fact that the interest rate issue definitely impacts the pound US dollar relationship. Which would make the pound US dollar a little bit bearish, but the oil relationship kind of cancels that. Oil is slightly higher, it's wedging, it's still at high levels, looking to break out, and I think that's one of the main fundamentals that helps to cancel out interest rates enough so you're not seeing, even though this is bearish, it's not as bearish as, say, the euro is. Like, I'm not looking for the pound US dollar to go down to parity relatively anytime soon. Not that it couldn't happen, but before that happens, we need the US dollar Swiss way back above parity, which I think that could shoot up, and we're going to get to that in a moment. That there's a lot of room to the upside, I believe. And then the euro US dollar, besides parity, I think we're going to definitely see before the summer is out the mid to lower 90 handle, 90 cent handle. So we could get down to 92 even, 92 half, somewhere around that area, I would say by Labor Day. So we're coming up on Memorial Day weekend. By the time we close out the summer, I wouldn't doubt that we see that type of level hit. So, and then with the pound, though, I don't think we're going to get down to parity, but I do see us still continuing to trend lower. We don't have a sell signal right now, so let's see if we still have a little room to the upside. So we take the last swing high and the last major swing low. We come down to this, and interestingly enough, we already came the 0.382. Now this is big because when you have a lot of resistance or support at the 0.382 level, and the market struggles, that usually tells you how strong the trend is, meaning that we would expect the market to sell off and test support before it actually trying to make new highs. If anything, we would look for this to continue to make new lows and maybe target even new weekly and not just daily and weekly lows, but even monthly lows by taking out this 121.52. So is that going to happen? Well, I don't know. Right now we've had 1, 2 times, maybe 3 times is the charm. So we'll see if we sell off or if we got to see how we close today. Remember that we have the Fed minutes, the euro is under pressure, the pound's up. There's a lot of indecision right now. Until that news release is done, I would expect more of this to continue. It's not a Fed meeting, but this is like a Fed meeting because the Fed minutes right now is something that we have a lot of reaction off of. And remember that when they do come out, you don't have a lot of time before the bond market settles for the day. Remember, they settle at 2 o'clock Central Standard Time, whereas the stock market is at 3 o'clock Central Standard Time. Obviously for Eastern, those are 1 hour later than that. I'm in Chicago, so I go by Central Standard Time. So anyhow, that's the indecision that we're looking at right now. We don't have a sell signal to get in front of. Remember, even with the euro, that has to be as of the close. It just is forming right now. So I would wait until today's close, after that, which we can digest the Fed minutes. We'll see what kind of volatility we create. I would expect to see a very high chance of seeing some spike highs if you see extensions of the correction against the dollar today. So now remember that all these major currencies are correcting against the dollar. Dollar strength is driving the trend, meaning the dollar is the bull, it is the driving force. Right now, these other currencies are stretching themselves to try and gain ground on the dollar. Now, the Biden being over in Asia, he's also helping a lot of these other currencies and hurting the dollar by the fact that he's lifted the tariffs that Trump put on China, as well as other countries, which means that now they're going to be able to sell their goods and make more money, whereas in our tax, and obviously we're going to have more competition for our own manufacturing, our own goods and services, which in an inflationary environment is hurting our manufacturing sector, as well as also because of what we're doing, it's right now putting a little stress on the dollar, which means our imports, their exports, which we now are taking tariffs off, become more expensive for us. So in one way, we make them cheaper for them, and then we make them more expensive for us without us getting the revenue, where instead of getting the revenue from the foreign countries, we're getting the revenue from our own internal tax base, from our own citizenship. So that's what we're doing. It's a double-edged sword that actually adds to inflation. It doesn't cut inflation. But that's what this administration is all about. It's obvious by what are the actions. So as far as upside, where are we going to go? Well, we still are looking for a challenge of this area here, the 50% up to 0.618. Somewhere in this little realm here, if we have a blow-off rally that happens over the next few sessions or into next week, 127.20 to 128.47, I believe, is pretty much the capping area. The trend right now is kind of coming into that, and it's a fairly stable trend that's going on right now. If you look at the overall trend for the pound US dollar, it's on a nice 45-degree angle. This would be somewhere where it could still jump up and press this resistance and then run out of gas and then start the trend lower. I do believe that we will see eventually more weekly and monthly lows, taking out the low that was set in the middle of May, especially as the Fed does raise rates. And I believe that the next time they raise rates, they'll probably go by a half a point. What would be really nice to see is if they do a 3/4 or a full point to really shock the market. That's what you really need to do in this type of case, because you're playing catch up. A 1/4 point once every month, or 4 to 6 weeks, 8 weeks, that's not going to help things. Not with where we're at right now. We need to jump on it, and really play catch up. Get to the point where we're not playing catch up anymore, and then let the markets correct. Is there going to be some pain? Well, absolutely. But then, who's not in pain right now when it comes to the markets, and especially when it comes to inflation? So here's our upside. Downside, if we fail from 121.52, once we get down to that area, I do see us getting down eventually to around 118, $1.18 in the pound US dollar. Then I think you're going to start to find more support, especially if oil remains where it's at or trends higher. That is the one thing that's going to restrict the trend. That's why I believe that the euro US dollar can get down to parity faster than the pound. Obviously, there's more distance to cover, as well as the fact that the Swiss already is just below parity, has touched it, and is going to most likely go up there too. So those currencies, and that's a lot of strength to the dollar, where all of a sudden you have two European currencies that are flirting with or have fallen below parity. That's a big indicator on what's going on globally. Things are falling apart over there in Europe. It's just the reality of things. The lockdowns didn't help. Now we have the war in Ukraine and the Russian restrictions and embargoes. All of these things are destroying their economy and their currencies. But we can capitalize off of that by taking advantage of these trends. So we're looking for a sell signal. Maybe we'll get one over the next few days. Don't doubt that it's possible that you could see the pound US dollar rally and the euro US dollar going down. The pound and the euro don't have to trend the same way versus the dollar on any given day. They may in the long run, which currently right now they are. However, one is more extreme than the other, and on an intraday level, it's not unlikely to see them diverge and go other ways. So don't get stuck on, you got to be short the pound US dollar when you're short the euro US dollar. That is not a way to go. I guarantee you're going to lose money if you do stuff like that. So US dollar Swissy, let's take a look at this. I'm going to do a little bounce around the chat room just to see if there's any questions. Hey, we do have a question here on YouTube. Hello, sir. I'm currently scheduling a call with you. Clarity. Looking forward to speaking with you. Hey, Chase, I appreciate that. So this is from China to phone hang. You got a really long acronym here for your YouTube thing. Thank you for reaching out to schedule a call on Clarity. I'm looking forward to making that happen with you. So if you have any questions about today's video, since you're out here paying attention and watching, go ahead and stick it on the chat here, and I will address it. Thank you very much. All right, cool. Nice interaction there, and we got a couple more likes on the video for YouTube. Wow, you guys are really great today. And Discord got, yeah, for just starting up on Discord, we have people that are actually showing up. That's very encouraging. All right, so we have the U.S. Dollar Swissy. What's going on with thisy? Well, I'll tell you what. We've had a nice big sell-off, and I think that this move has been mostly profit-taking. We do have a potential short-term buy signal forming. This is kind of a more neutral one, not one that I really like as far as using as a reversal or an actual getting into. But let's say, for instance, I was short right now the US dollar Swiss. If this market was to close where it is right now this afternoon, that would be called a Harami buy. The Harami buy would set us up for a short-term pause. So this would be a place where I would be more looking to take profit from the short than looking to buy in. Tomorrow, depending on how that settles, that will be the way that we figure out whether we want to buy into the market and and ride the trend. Now remember, right now we are in a corrective sell-off mode. Okay, now that is counter trend. Interestingly enough, look at where we are right now. We are right in between the 50% and the 0.618. Okay, so we've already gotten down to our basic target zone where we should start to find support and start to go back up. Now, as you can see, the trend was inching higher for a very long time, and since the end of March, it has exploded. Now, the reason we've had this quick of a correction is something that if you've watched my videos in the past, amplification tends to duplicate itself. There's direct reflections and inverse reflections. So this is a direct reflection, meaning that how markets go in is how they tend to go out. So if you draw a line, once we had established this high, okay, see the velocity of this rally right here. Now, of course, it doesn't mean we come all the way back down here. However, with all this strength, I mean, in the period of all this time, there was 1, 2, 3, 4, 5 down days before this market finally peaked and then turned around. And that's in a course of a month and a half. 5. That's it. Out of, you know, close to 30 trading days, or around 30 trading days, give or take a few. Now, look at this. This is the complete opposite. Since we've made the high, we've had only one up day. Today has not finished, so we don't know. We could go negative today and still hit support some more. We don't know what's going on until they close. So let's not get ahead of ourselves. We have one up day in a period of 1, 2, 3, 4, 5, 6, 7 trading days. Okay, so now that's the same type of relationship that we just came out of as far as momentum to the downside. However, if the overall trend is bullish, we don't expect a 100% retracement because that's not a trend. That's just finding a floor and a ceiling and range trading and setting an amplitude. When you're trending, you're making higher move highs, higher move lows, higher move highs. You're no matter what, you are on an upward tilt. Now, if you want to see something here, so anyone that knows Gann and Fibonacci knows that 50% is a big deal. So 50% is also like 45. It's 45 out of a 90-degree angle, which is all you can use on a plane for a chart. It's the 90 degrees for your X and Y dimensions. If you draw a 45, that's typically a very good average line for a trend to rally above, or at least ride along to be stable and maintain a trend. It's whether it's bullish or bearish, those are usually ones that you are very steady. Once you start to amplify above or below, that's where extremes come into play depending on what is going on, plus or negative for X asset market, what have you, you're talking about. So trend being higher, now we come back to this corrective area right in our Fibonacci zone, which we like, that 50% to 0.618 for the to find critical support. We also can see that from this low, if you draw basically a 45, we're coming right into this area by attrition over a couple of days. We're coming to where this would be a nice area to round out and start to at least come back and challenge resistance a little bit. Markets don't just go in one direction. If the market was all of a sudden becoming a bear, we would expect at least a bullish correction before we start to test support again, especially because this is such critical support. Now, if we fail from 95.27, well, that's a totally different story. The only thing I could see that would bring that, though, is if the Ukrainian-Russian war stops and the embargoes are lifted, which that ain't happening anytime soon. Oil would have to tank, like get back below 90 bucks, definitely below 100 bucks a barrel, and I would say probably get back to 95 to 90 to really accelerate any type of true slide in the U.S. dollar Swiss. At the same time, you would need to see a big rally in interest rates in the Treasury bond market, which, oh, by the way, they're going down. So that doesn't go and coincide with that. So all the fundamentals as far as currency pricing and also geopolitical things in the environment are all pointing towards a higher U.S. dollar Swiss in the longer term. Okay, all right, so we're bullish there. As far as upside targets, I'm targeting parity. Let's wait and see if we have a buy signal today. This would be the short-term neutral, not necessarily trend changing. Since this is going with the overall longer-term trend, I'm leaning on this one a little bit. I think you can get in front of a nice rally. And even if it's just a corrective rally, I think you can get a nice little pop. The low from yesterday, key off of that. If you're an aggressive bull, I would use a few pips below that as your stop. If we fail to take out yesterday's low, well, the short-term downtrend is not over, obviously, because we would be making lower move lows after a lower move high. So remember, you always be mindful of lower move lows and lower move highs, so know which side of the trend you are on. I know it sounds basic, very childish and very, like kindergartenish, but guess what? Those fundamentals are key. If you're not mindful of that, you tend to start making stupid mistakes. When you're mindful of the trend, you don't start taking counter trend trades without having a really good reason and knowing what risk to take. Otherwise, you end up chopping yourself up, and then you end up chewing up your capital, and then when you do have a good opportunity, you can't take advantage of it or take as much advantage as you can. So these are the things that you learn in my money management chapter. If you haven't read the book, High Probable Japanese Candlestick Patterns, available on Amazon.com, check it out and you will read all about it. So, all right, let's go to the US dollar JPY. All right, US dollar JPY has been under pressure for the past couple of days, and as you know, actually past couple of weeks. I've been long this since last summer. I took some profit along the way, wrote it up, and now I've come back 5 handles on most of my position. That it sucks because that's a nice little correction here. I really didn't think it was going to start to come back below the 28 even area, so I was wrong, but that's all right. These things happen. I'm still playing with house money on it, and so I had gotten stopped out of some of my stuff, and the market pulled back, and now I've gotten back in with a little bit more, so I started buying back in. Today we do have a little bit of turn in the market happening. Now, as far as this market is trending lower with lower move highs and lower move lows, but overall this is a bull. Now remember the last market, it shot up and then came down. Well, this one, it shot up, and this was a Japanese almost intervention or clue of an intervention that caused this correction. It only lasted 3 days. Then we finally got up close to this area where they were going to intervene, and it didn't happen. And then they had divergence between the Bank of Japan and the Ministry of Finance. Not so good. Boom, we ended up taking the highs. They never pulled the trigger. We don't know what they're doing. And I think that right now the fundamentals with the bonds going lower and the oil going up, you got to take into consideration that this trend to the downside, this downside correction is most likely over. Could we still test support? Of course we could. I think you have a low risk buy right now shaping up with today against yesterday's low. I would key off of that. If we take out yesterday's low, I don't know exactly what you would expect the downside. The only thing I could think of is that the interest rates are selling off today. They are in an upside correction. If they can get a rally going between now into Friday, that could cause the US dollar yen to be under pressure still. So we may see a little bit more of support banging right now. It's a low risk buy area here. Like I said, I'm net long, so with me, my stops are much lower right now for what I have on still. But I would key off of this last move here as far as support, which we're really close to. Support is basically right below where we touched yesterday. If we were to fall down, this would be the area where I would expect us to find the last step. and then after that bounce back to go higher. Now we could start to go in a range trade between 126 and 130 for the next month or two, but with oil potentially exploding to the upside, that starts to give us the idea that resistance is going to be challenged more than support moving forward, especially as we get into the summer. So we'll see how oil moves. There was oil numbers today. Didn't really cause much of a stir. We are going in front of a holiday weekend, and we know there's going to be a lot of consumption this summer too. Demand is not dropping, and and supply is dropping. So that would probably add more increase in pricing, and I would assume that that would also give more strength to the U.S. dollar, Japanese yen. All right, so real quick, let's check and see if we have any questions. No, we got a couple more likes on YouTube. Thank you guys. We really appreciate that. Discord, okay, yeah, all right, nothing there. All right, cool. All right, now let's go on to the AUD USD. Australian dollar, US dollar is starting to pull back versus the dollar also. Today it's right in the middle of its range. It came off its lows nicely, but it's running out of gas. Australia's got a lot of problems. The rallying commodity markets are very helpful for them and should be giving them more strength. However, they have a lot of issues with their government, with their central bank, and also with their economy. The lockdowns haven't helped them. They've done nothing but hurt them, just like every other country out there. And they are still pressing it. The COVID is starting to grow again, and we know that they were very, very strict and severe on their lockdown measures, and what the collateral damage of those lockdown measures is being shown in the economy and also in society there. And I would expect that since they are not changing their narrative, that they will continue to do more of the same. This is destructive for the Australian dollar, US dollar. So the market right now has been making lower move lows and lower move highs. We are coming off of an area where we had this buy signal a few weeks ago, right around the time we had in those other currencies or similar time frame. As far as if we go off the major swing highs and swing lows, 0.318 we didn't, or excuse me, 0.382 we didn't quite get there. This would be the swing high I would really watch out for. We would have to get above this 72.68 to really become bullish in any fashion, and that would be not necessarily bullish. It would be in a neutral bullish fashion, meaning that we would expect resistance to be played with, still expect some strong slides in the market, breaking down and testing support, but holding up, not getting down back towards these major lows. But I don't see that as being the case right now. Right now, I believe that we could still have a spike high up above 71.45. I really doubt we can get up to 72.68. The only thing that I could see that we could maybe propel that would be if the Treasury bond market does get a rally again. If it continues to make new highs, meaning lower rates, that in the short run could help the Australian dollar or US dollar spike. And that would be because of dollar weakness in the short run because of the fundamental interest rate factor. But setting up for this to be only a corrective move, which then as soon as the dollar starts to firm up, interest rates get higher, bond prices go lower, then all of a sudden Australian dollar, US dollar starts to implode. New Zealand dollar, US dollar, which trades a lot in tandem with Australia, they just raised their rates and shot the half a point wide, which was expected. They're in a current upside correction. They are in worse shape than Australia. We expect them to maintain their bearish trend. I think that you will see more severity in slides with the New Zealand dollar, meaning breaks going down to take out the lows and trend lower than in Australian dollar. They are also in the same type of boat as Australia. Excuse me. But they have a lot of issues. I wouldn't doubt that you start to see, besides their economic numbers, that their banks are going to start to have a lot of crises. And this is going to spread. It's already been in Sri Lanka and a bunch of third world nations or nations that are just below the first world. And Australia now is a first world country that's slipping into becoming a third world country. New Zealand is also on that level as well. This is not a political thing. This is just a reality of what's going on. Their economies are decaying. Their debt levels are becoming unsustainable. Rates are going up across the globe. Their ability to finance and deal with a lot of things that they need to are becoming very, very hard. And I would expect to see that these are places where you're going to, because they're so big and because they're part of the Western world, if you will, these are the first big wake-up calls to America and the stronger European countries like Germany and Poland and the England, the UK as well. If they don't change their policies and come off these narratives that they've been holding to, it's insanity. It's bringing the world down. It's crushing currencies. It's crushing economies. It's crushing food supplies. Wars going on. We need to unify and find peace. We need to mediate and live life instead of being super afraid and also imposing, death, which we're doing right now. We're supporting it. We need to be finding peace. Instead of supplying arms, we need to be generating peace talks. That's what we should be doing. Instead of talking to Zelensky, we should be talking to Putin. That's what we should be doing. And until that starts, that's what you do when you mitigate conflicts and try to have a resolve. We're not doing that. NATO's not doing that. And I don't see when they're going to start. So until they do that, these currencies are going to be under pressure. So I'd be mindful of it. And the dollar bull right now isn't because the dollar is so strong, remember. It's because these currencies are that weak. All right, U.S. dollar, Canada, interesting trade going on here. So yesterday we had a short-term buy signal here. Now the trend since the beginning of April has been making higher move highs and higher move lows. We came off of a very bearish trend coming into 2 days ago, riding those lows, reversing gears yesterday, and then we had a piercing line buy signal. So this is a trend trade because the short-term trend is definitely bullish. It's going with the trend. Overall, longer term, this trend is neutral. It's been in a big sideways. We were very bearish this market a while ago, and as you can see, all we're doing is testing the upper, and we called this one too. We stretch the upper end of the range, and then we come right back down to this baseline of trading that we've been in for the most part of over a year. So now we have this buy signal. As long as we don't take out this low right here, here at 127.14, then I would say the trend is your friend. This short-term buy signal is coinciding with the trend, and if we can get a rally up, I would say are we going to make new highs? That's a real tough one, but I think that for sure this buy signal, as of yesterday, already hit the 0.382. So that's why I'm bullish on this, that if it takes out that high, excuse me, my eyes are a little, pollen count is so high, gotta get some drops in. Plus these lights are a little bit rough on my eyes here. So $29.16 up to $1.2953, I think, is the area where you will put a cap if this is just going to be a correction. Meaning that if this high here is currently the short-term top, this is about the area we're going to run out of gas and then either go sideways or actually sell off and start to make lower move lows. Lower move lows until they really get down below $1.24 here don't mean anything. It just means that we're trading around in this major range between $1.24 and $1.30, which isn't really that big, but it's been there so long that it seems like it's very extreme. So right now, short-term buy signal as of yesterday. We're looking for follow-through. We've already challenged or come close to challenging this high here. Taking out the high from yesterday, or from today rather, would be a very big indication that we should have enough gas to get us up, propel us up to this 129.16 to 129.53 area. If we fail from here, that negates the buy signal, and the 127.64 key support line will have us laying on 127.14 in a heartbeat. Once again, a failure from here will have us sliding probably for the next few sessions at least, maybe even for a week or more. But remember that these distances aren't that extreme because of the time that we're looking at. Let's go back to the Euro, US dollar real quick and see where they're at. Still lower on the day. Let's see if we have any questions in the chat on Twitch. Hey, can you tell us how to use indicators in your trade and what is that's name? Let's see, indicators in your trade and what is that's name? I don't know what that means. So indicators, yeah, you can use indicators. I do use indicators also. The one thing is though, when I use indicators, I don't necessarily use the ones that you would probably use. I use the markets. The markets are in real time. The markets are the best indicator. So for instance, this is a really good question. So if you go to my website, forex-trading-unlock.com, I'm going to show you how to trade the yen by using other markets, which are the best indicator in real time to show you, give you direction on how to trade something. So we're going to pull up the futures here, and we're going to go to US 30-year bond market, which we talked about. Now remember, futures and the interest rate futures, they're the ones that drive the cash market. They're the best thing to watch and the most widely traded. All right, so as you can see, on a weekly basis, this market's been trending higher for now going on its third week. Well, it's just a bullish correction. All right, so this market is trending higher. Okay, now futures are always in delay, so this is as of yesterday. All right, so let's look at this. This is May 9th, 2022. Okay, so we have May 13th of 2022. Now let's go to the US Dollar Jpy. Alright, so May 9th, and you're going to love this. Alright, so this is the same time, the same low as we have right here. From May 9th up, we made a lower move high, higher move low, and then higher move highs, taking this on the neutral campaign. Short-term bullish trend confirmed with higher move highs and higher move lows. I think you're still with me with that. You should get that, right? Same thing happened here. Interest rates, remember, are a function of currency pricing. As interest rates are going down, dollar strength starts to wane. All of a sudden, dollar yen starts to trend lower, okay? Also, 30-year here, if you look at this, here's this line and this line. What is this? It's a neckline. You know why? Because this right here, this lower move low is the first shoulder in what will be a reverse head and shoulders pattern. Now, for those of you who don't know what a head and shoulders is, that's a great pattern that's an indicator of a reversal of direction. So, to make this clear, this was a swing low here. We made a swing high here. This marks our first high that we use for our neckline. We've traded lower after this lower move high and made a lower move low. So the first shoulder and the head will be in the same direction of the trend. Then we establish a lower move high. Here's our neckline. We start trending lower, lower, lower. Then boom, we rally, we challenge that neckline. Then boom, the next day we go above it, we settle above it, we're trading above it now here. This is a breakout to the upside. This confirms this is a shoulder. This is an upside down or inverted head and shoulders. That's a buy signal. That gives strength to the rally. That means rates are going down because interest rate pricing is going up. At the same token, that adds pressure to the US dollar, Japanese yen. So that means that fundamentally, you know, now does that mean just because the bonds go down or bonds go up that US dollar yen goes down? No, not at all. Another thing that's been driving this trade is the oil trade. So the fact that, and you can get that also off of our website, when you go to the markets, you go down to commodities. Remember, futures are always in delay. We can't have it live because you have to pay for that. That's a legal thing. It's not because we don't want to do it. All right, so if you look at the futures here, they've been wedging, okay? But overall, we know that this market's a bull market. So for the US dollar yen, with oil wedging and looking like it wants to challenge resistance, that's another live indicator that you're going to start to see strength. So that's why we're looking for this market, if you were watching the webinar earlier, to start to find support and turn around, especially because we have a short-term buy signal that's forming. I still think we could trod these lows a little bit, but if you see oil spike up and all of a sudden that bond rally collapse, well, that's when this is going to turn around. But right now, because those bonds are set up to trend higher, that's adding resistance here. It's getting heavier on the US dollar yen. Oil hasn't broken out to the upside. It's been going sideways, and oil has been one of the biggest drivers of this trend. Oil's been railing, so the US dollar yen's been railing long term in a very big way. Interest rates have been tumbling in a very big way all year for the last year now, and especially the last 6 months. And here we can see that's reflective of the same price. So as far as indicators, I like to use the markets. Now, of course, you can also use, I use the Fibonacci for support and resistance. You can see how we do that. But here, let's take a look at some other things. We can put in moving averages, which you got to remember, all these things like moving averages, they are always in a lag. Okay, so this one here, we got it at 9. We're going to reset this one to make it go to a 13, and then we'll do another one, and we'll do it to a 21, and we'll also change the color so that we know what it is. Okay. All right, so moving averages, you can see, we were using those fundamental things. Now, this is where the regular technical indicators can help you out. Those fundamentals are already confirming what the market should be doing as far as in the short run or longer term, depending, because we know interest rates are going up for a long term. That's why overall, even though they're rallying, they're going to go lower some more as the Fed raises rates. So with those fundamentals, once you have these indicators flip, like here you have where the shorter term is now below the longer term, that's a sell signal. It's lagging, the market's already topped, but this helps to confirm our fundamentals. So when you see this start to happen with the lagging indicator that reinforces the other ones, you know that that's securing your trend. So this is definitely a corrective bear trend. That confirms it. Once you have something that, like you hit key support, that's when you would look for your lagging indicators to start to catch up and stabilize, and obviously look at the fundamentals, meaning that if this market bottoms here and then starts to rally, odds are is that this bond market isn't going higher anymore, it's going lower. And that's another thing too, is that here we have this major buy signal. If all of a sudden we fall back and start making lower move lows, and especially if we take out this shoulder, this is another big indicator. If the bonds take out 137.31 on the future side and start going lower like that, odds are really, really good that the US dollar yen is going to start to challenge resistance. So I hope I answered that question well enough for you as far as how to use that. Let's see, we got something on YouTube now. Any thoughts on gold? I just like your book. Oh, thank you. That's awesome. Thank you, Gary. I appreciate it that you like the book. Let's see, you want to know about gold. Well, gold is also something that goes along with interest rates and currencies. XAU USD. So spot gold, let's take a look at this. This is for Gary on YouTube. He wants to see what's going on with the gold market. All right, gold market has been correcting higher. Okay, interestingly enough, let's see, this started on May 16th. Let's see, May 9th was this, May 18th. Interesting, our shoulder here for the bond market, before we started to have this excessive pressing of resistance on this correction, came right around the same time simultaneously as the gold market turning. Right now, obviously, this market's trending lower, making lower move lows and lower move highs. On the longer term, though, we're in a bull market. So let's look at the monthly. All right, so monthly, we can see that we failed to make a newer move high here, so the critical resistance definitely would be above 2072. Are we going to challenge that? There's a good chance that we could, especially with inflation running the way it is, and oil prices and other commodity prices. I wouldn't doubt that we still are going to see gold start to challenge higher move highs. Now, that speaking of that, even though we didn't take out this high, we are making higher move highs and higher move lows on a longer term basis. So we have this low here of, what's it, 1,676, and this is 1,677. So this is above it. So we made this higher move high, higher move low, and now since then we made a lower move high, higher move low, higher move high. Even though it didn't take this out, we're making a higher move low. Right now we're consolidating, but we are poised to challenge resistance more than support. I think that this sideways area here, you got to look at this is on a multi-year thing here on a monthly basis. Now once we get to the weekly, we can see that we had been trending sort of lower and consolidating, but now volatility is boom to the upside. And also here, if you look at this, we're starting to show that we're making higher move highs and higher move lows. So that trend is giving us support. So I am neutral to higher for gold. Obviously, we are in an upside rally right now as far as on a daily basis. Today, obviously, trending a little bit lower, selling off. But look at what's going on around the world. Interest rates selling off. We have the Fed meeting that's going, minutes that are coming out. So I would think that a lot of what you're seeing right now is related to that. Now, interestingly enough, though, since you read my book, if we settle where we're at right now, we would have ourselves a short-term sell signal on a daily basis for gold. This would give us a bearish engulfing line sell signal. And let's just see if we go by that high to this low right here, that puts us right around the 0.318 or 382 is right there. But let's move this down to this swing high here. All right. Now all of a sudden that 0.382 becomes our 50% level. Okay, and 0.618. We didn't come to that, but from this swing high to this swing low, look at Fibonacci coming for us here. 0.382 yesterday. So Gary, if you're still with us, yesterday's high and today's high where it was buffering on resistance, this is key. If this is just a correction in the short run, especially if the momentum is that strong for bearishness on gold, we should have locked in a solid high. So I would be bearish against yesterday's and today's high and looking for a test of support in the short run, especially if we settle where we're at right now or lower. That locks in a bearish engulfing line, and then I would expect us to get down to let's get rid of this, and then as far as if gold is going to find support, we would find it right here at around $1,800. As long as we hold above $1,800, I think that, and I think this would be a good idea. If we were to trend lower right here, let's say the sell signal works. We trend lower for a few sessions, get down around 18, we start to base here, and that sets us up for a big rally higher, because we would be hitting support, we're making a lower move high on the short-term trend, but if we can curve around and make this happen right here with a short-term sell signal, if it's just a short-term sell signal that gives us a correction right here and we find support, then this will stay intact, and then we'll come and made a lower move high, establish a higher move low, which neutralizes the trend and sets us up to go higher, which on a daily basis we've been under pressure. It's very possible we could see a big turn in gold over the next few weeks. Right now, oil has been consolidating. A lot of commodities have been consolidating. We've started to see some divergence and things, so they're winding their coils. We're not going to stay where we're at forever. Gold has had quite a run. It's had a lot of volatility, obviously. And And you got to look at what's going on with the crypto space and a bunch of other things. There's been such an implosion of things that where's your store of value now? You know what I mean? I mean, I just heard about another new crypto thing. I mean, this is so crazy how they create the coin, people buy it, you're the one that sells it to them, and they can't sell it for a year. They're locked into it, so you lock in liquidity on one end or freeze liquidity on one end while you're adding more by yourself because you create the tokens and you're just selling them. So, and people are locked in. That's very Chinese, where you can't short the market and you can't sell it. I mean, there's all kinds of rules on how you can't even get out of your own trades, let alone how to get into a trade. That's not a free market. That is a Ponzi scheme. It's a scam. It is not real. It's a real way that people are scamming you, you know, and people are accepting it right now. I truly don't get it, but obviously the new generation, I mean, when I was a kid and what I was learning in college and even for most of my life in the financial system, I know that counterfeiting is illegal, and it's illegal to create your own currency as well. But for some reason you can do it in a digital cyber world. Well, okay, so what? You're not making tangible paper, but you have these tangible things that you can use as the intermediary. So this is no more than a wallet. You just don't happen to pull the change out. So, but that's your take on for gold. We'll see how it closes today. Remember, we got to see how the market reacts to the Fed minutes. If we settle where we're at today, we'll have a sell signal. And since you brought this up, Gary, I'm going to bring it into our next webinar also tomorrow. Oh, we got another question on YouTube. Also, I think the average consumer doesn't know BTC dipping below means that the machines turn off because of overhead. Absolutely. Very good comment here on YouTube from... okay, let me see if I can say this right. Chana Fong Hang. Okay, I can't say it right, but great comment. Gary, you're welcome, by the way. Thanks for the interaction, guys. I really appreciate this. Anything we can get as far as comments on Twitter and YouTube and Twitch and stuff like that. Or it's not Twitter, rather, Discord. We really appreciate this interaction, and obviously this is what we're here for as well. So yeah, XAU, the gold, there's your answer on that. Gary, thanks for the comment about the book. I'm glad you enjoyed it. Right now, it's amazing. We've had a lot of great signals this year, and with this volatility, you know, normally, and when I wrote that book, we didn't have the volatility we have right now. So your expectations on targets were not quite what they are right now. And it's nice. I mean, it's good. It's a good time to be a trader as long as you are disciplined and you maintain good money management. Because if you fail at either one of those, it's like, think of it like this. Like, I'm a White Sox fan, and I don't know if you're a baseball fan or not. I'm not the biggest baseball fan, but I am a Sox fan. Errors have been killing them so far to start this season off. It's also prevented them from winning games. It's definitely helped in aiding and losing them games. Same happens when you're trading. Same exact thing. So the more errors you make, it's just like playing poker too. It's and trading is a lot like poker. The edge is not. It's not. Most of the edge against you is your own either lack of knowledge, lack of discipline, and lack of money management. If you can maintain key money management rules and maintain discipline and have a trading plan, you put the odds in your favor. If you don't, you're just gambling and you're just rolling the dice. And well, if you want to do that, that's great. I'm sure it's fun and exhilarating, but the results you typically get for something like that are, well, they are the results you're going to get. So let's see. We've answered those questions. Since we talked about the cryptos, let's get to BTC USD real quick. So we've been talking about this in our webinars lately and how it's been going sideways. And the old question of, is it the dog that wags the tail or the tail that wags the dog, is really started to come to be answered right now. If you watch my webinars, and I've been involved in the crypto space for a very long time, I have the Levi Strauss approach. That's why I like the comment left on YouTube by our viewer here, that once it gets to a low enough price, it doesn't become affordable to mine. It's too expensive. The cost is for technology as well as the power to mine these coins becomes, well, it's above your head and you're losing money, especially because no matter what, when you're done at the current pricing, it's impossible for you to make money. So we'll see how that, what that does. Definitely with Bitcoin, I think that's one of the things that's freezing it kind of at this price. It's a very good comment. And as far as Bitcoin, I used to call the dollar index of cryptocurrencies. It's not an index, but where Bitcoin went, it seems like all the cryptocurrency space seems to follow. So, and we're going to go into the next one, and I think this is going to show you where we're going and definitely where you can find some action still. All the crypto space is taking heat because of the recent negative events. There's a lot of negative press on crypto. It has every right to be. It's filled with fraudsters and scammers. The technology has some value. People forget that, and it doesn't get used for that. The things that they're technically created for really don't end up being used for that mechanism. They would like them to be used for that, but they aren't. And we'll show you which ones are as we get through this real quick. We do have a comment. I noticed BTC has been correlating to US 30 years because now considered more of a risk than an asset hedge. Absolutely. And if that is the case, very good observation. If that's the case, then Bitcoin, no matter what, has seen its highs. You're never going to see Bitcoin go to the highs that it had before. If anything, what we're looking at seeing Bitcoin is going to be a gradual decay, and it's going to look like Dogecoin eventually. It's just not going to get down to 16 cents or 9 cents or 8 cents or whatever it is right now that quickly. But it's going to continue to make lower move lows and lower move highs and continually to just diminish. And it's just a matter of where, if you have invested in it, you're either going to say I'm all in, and either this is really going to turn around and make me a fortune one day, or tulip bulb, just the modern day tulip bulb is the phenomenon that you can focus on and be like, you were taken. They're tulip bulbs. So, but now let's get to the ones that move. So ETHUSD. This one's going sideways too. Now, Ethereum has a technology that is, at least in the short run, very viable. And I think one of the main things that supports this one, I think that if you have rallies, you have a better chance of seeing a rally out of Ethereum and getting more bang for your buck than you do Bitcoin. But even this one is under pressure. And I would say that the faith in Ethereum will last longer than in Bitcoin, meaning that we have a better chance of seeing Bitcoin get down to 20,000 than we do seeing Ethereum get down to 1,000. Now, if Bitcoin gets down to 20,000, Ethereum probably is going to be at 1,500, but I think you're going to see more of a severe slide in Bitcoin than you will in Ethereum. Let's see, not many people talk about BTC high being influenced by money printing. Yeah, you are 100%. That's another good comment here. We got some really good comments on YouTube here. Thank you for your input. That is true. One of the biggest surges for Bitcoin and all of the cryptocurrencies was all the free money. And this is the crime of the century. I mean, there are so many things that the pandemic, first of all, you either live life or you die. You live in fear and hide in a hole, and eventually you're going to die. We're all going to die no matter what, but living life and fighting for life is what is gotten us through all of time for humanity. And we have had a great learning lesson, or relearning of a lesson that you can't go and hide in a hole. You have to live life and face life, and you can't shut down the world. If you shut down the world, especially one that is so big now, this is what happens. Everything that's going on right now is a direct reflection of the lockdowns, the mandates, all the shutdowns, and it would continue shutdowns. Look at Shanghai. The reason that all the container ships are not moving out of Shanghai is because of the lockdowns. Don't say that it's because of Putin and Ukraine, because it has nothing to do with that. It has to do with lockdowns. Lockdowns are creating these situations. People say, oh, it's COVID. People are dying. Well, if that's the case, then why is it that less people in 2 years globally have died than died during the 1918 Spanish flu? You know, you got to remember, 20 million people died in the U.S. in 1 year in 1918. Now we're supposedly over the 1 million mark, which is amazing that we were 8 months ago in America, we were at over 2 million deaths for COVID, And now, because they've readjusted numbers, we're just over 1 million. So, I mean, whatever side you're on with COVID, it wasn't severe enough. It wasn't the Spanish flu. It wasn't the Black Plague. Even if it was the Black Plague, you don't shut down the whole world. You may slow things down a little bit, but you don't lock down the world. Lockdowns don't work. It kills economies. People are going to be starving now. It's not just the war in Ukraine. People are going to be starving globally because supply chains are cut, fertilizers cut, the price of energy is so much more expensive, supplies aren't getting to where they're getting to. You can give all the surplus stocks of food away to all these people that we've been doing. That's creating more inflation. It's causing a decrease in supply. Now the countries that had supplies are running low. So this is going to keep on. It's a great comment there about how all that free money, which caused inflation, was put into these things. Now it's sucked out by the people who created the coins, and everyone else is stuck holding the bag. Now you have all these people that had this money that instead of saving it and having money now in reserve, they have cryptocurrencies that are worth 25%, 10% of what they were worth when they put the money into it a year and a half ago. So that is the crime of the century on so many levels, between the crypto space, the drug companies. I mean, it's sickening when you really look at it. But we can capitalize on it in the real markets, like the currency markets, because they're real. They're real. I mean, you can be on the wrong side of those, but that's because you were either not disciplined, ill-informed, or gambling. Here, this is only gambling. It's a greater fool's theory. You fell for the scam. Technology is really good. Quantum computing is going to replace almost all of it soon, but in the short run, it is fine. Now, technology, once again, Ethereum is the one that has a backbone and something that's solid, but you can see that even that, it's waning and it's really tight. Look at how tight that range is. So let's get to the one that really does have a trade. Look at that. Look at what's trending. I told you I'd bring it to you. So XMR US dollar. Now, right now, it's right about at the upper end of the range that I like as the buy zone. From 180 to 220, I think, is a good buy zone for Monero. Once it gets to 280 to 350, that's where you take profits and wait for it to dip down again and average down your buy. This technology is functional, it's being used. Even if quantum computing comes in, it has a good viable chance of remaining and evolving. Now, as far as being something that's going to go, see, you can't look at it. Everyone's like, oh, I'm going to buy a Bitcoin, put $1,000 in, and in 10 years it's going to be worth 1,000 times what I put into it. Well, that's great in a Ponzi scheme and things like that, and if you're in fantasy world. But the reality is technology is built with the presence, under the premise of making things faster, better, cheaper, and more efficient. Right now, cryptocurrencies, they may be faster, they may be more efficient, but they are not cheaper. And as far as a store of value, well, it's not good as far as in a business sense. Store of value, that's a questionable thing too. Look at what just happened in one cryptocurrency this over the past week. 98% dissolved in 2 days. Gone. Goodbye. No stops, no limits. No regular market is like that. But hey, crypto space, you get what you pay for. When you buy into a Ponzi scheme, eventually one day, if you're not at the top of the pyramid, you're at the bottom, no matter what. You're either at the top or you're at the bottom. There's only a few people at the top. Let's see. Wow, I didn't think to see Monero in the green. Oh, you like that? Yeah, see, now I'm not, as far as when it comes to trading these things, I'm very leery of some of the bigger names and also some of the lesser names. But Monero, it's a tried and true. The technology is being used. It has a value. However, it doesn't have value over 350, 400. That's when it goes out. It's like, you think about this. We're getting to that point with gasoline. People with diesel. I know a lot of people have diesel trucks and a gas car. Now they're driving their gas cars and letting their diesel trucks sit because diesel costs so much to run. You don't get as much to the gallon as you do, or many gallons to the mile, or miles to the gallon as you do with gas. So, I mean, and people make choices. So that diesel technology, which farmers use and manufacturing use, that means they're using less and less and less of it. The less they use, the less they can produce, the less they make, the less it's available. Supplies go down. Yeah, sad to see Luna implode. Well, when you're a scam, you're a scam. And finally, the piper got called very quick. I'm sure that they're a little bit upset with that too, because they would want to still be making more money off of suckers. Now they've cleaned out house. I don't know if anyone wants to buy into that one again. So, but now we see this rally here, and it's kind of interesting to see how we came off this low, made this lower move high, higher move low. We are now making the higher move highs. Remember when I said Bitcoin used to be the dollar index of the crypto space? Not anymore. Now it just shows that we're the biggest segment of the retail environment. And think about this. For those of you that are watching this video is your Forex traders. The average retail account in most brokerage firms around the world lasts between 3 and 12 months. That's the life expectancy of a retail account. Most retail accounts in the beginning are started by people who are undereducated in trading, not undereducated in trading. And then also they don't treat it as a business. There's all kinds of things that they're lacking, and that right there is the reason they fail. Sometimes it takes 3 or 4 or 5 times before they can get to a point where they start to stabilize and actually become a successful trader if they're persistent at it and didn't overdo it. As far as I know, people that have gone in gung-ho, put in large sums of their savings to trade and risked it and started to make some money and thought the world was going to be a rosy and amazing place, which it is always, no matter what's going on. They didn't have discipline, money management plan, what have you. They were really gambling. They just got lucky. Everyone can be on the right side every once in a while. Just like we had mentioned about all the free money that came into the crypto space, it went into the stock market too. Remember that V-shaped recovery? I had people that I've known my whole life that have never put a dime towards a retirement, and still they didn't even put it into a retirement account and buy stock. They just opened up a regular trading account, which they deposited money that they had to pay taxes on, that they put into stocks that now they're down on. They were all geniuses. When I had been like, I think you should be out of the market. I've been out of for the most part, out of stocks for 3 years now. Did I miss a lot? Yeah, well, I missed a lot in some degrees, and in other degrees I haven't missed anything. I still have my value. So I know where I'm at without any stress. And I'm looking for better opportunities, which there's always opportunities when you have cash, not when you put all your cash into stocks and now you're down and you are wondering what am I going to do, liquidate them or not, which some of them have to so they can pay the taxes on it. That's the other thing too, is that wait until we get to the end of the year where a lot of these stocks and cryptocurrencies are beaten up. People need to pay the taxes on the money they took from the free money. It wasn't free money from the government. You still got to pay taxes, so you got to give some of it back. Well, if you blew it all, whether it was on video games, Netflix, or cryptocurrencies, or even the stock market, what do you have left? Let's see, you have a tax bill, and how much of the money do you have left? I would say that more than 50% of the people have, if they're lucky, not enough to cover even half of what their tax liability is, let alone half of what they were given in the first place. But yeah, for Monero right now, we're going to continue to watch this rally here. As far as how high can it go, we've already took out the 0.382. Now, interesting enough, remember I said that 180 to 220 is my sweet spot? Well, corrective zone. This is my buy zone, but remember where resistance becomes support or support becomes resistance. Well, right now I could see us getting up to 222 and then start to bobble around a bit, have a little correction, make a higher move low, and then maybe boom, get another rally up again. And then you will eventually have a sell-off like this. We'll have a bearish trend. This here is mostly because of the whole crypto space, but there's value. These other cryptocurrencies have their floor keeps on dropping. Oh, look what happened to Monero. It found a bottom. It's railing while the rest are going sideways or going lower. They're fighting to hold. So that's because they're worthless. They're Ponzi schemes. Monero does have an honest value, but don't buy it because you're looking to see it go to 10,000 or 100,000. I'm not saying that it can't. Anything can happen in the markets. Most likely it will not occur, but it is a great trading range, a range trading mechanism. and a technology that has value. All right, let's see. We got a little more. Let's see. I'm probably a beach crypto market, especially because that's how I got into trading. Do you think it's prudent for an aspiring trader to find other markets without crypto's doom and gloom? Absolutely. When it comes, that's another great quote. Wow, you got a lot of great questions on YouTube today. Thanks a lot. Yeah, you should be looking at other markets. I started out on the trading floor at the CBOE, then I moved to the CME, and then at the Board of Trade. I got my hat trick on all 3 exchanges in Chicagoland. One of the things that really astounded me when I first came into the business was you had OEX traders, you had S&P traders, you had bond traders, you had corn traders, you had hog traders. That's what they traded. That was it. So if their markets were busy, they had opportunity, they were busy, they were either making or losing money. If they were dead, there was not a lot of opportunity. So if they didn't have money to ride out the wave, they struggled and stressed and made more errors, which made things worse, and a lot of them didn't last. And that's what happens when you only trade one market. It's trading multiple markets. There's a difference between portfolio theory and trading multiple markets. Portfolio theory is you diversify. Instead of putting all your eggs in one basket, you find a bunch of things and you pretty much rest them there. Now, you will manage them, but you're not on a day-to-day looking into them. When it comes to being a trader, that's a different story. Whether you're a short-term or long-term trader, you have your plan and your goals, but you should always be looking for an opportunity somewhere. When it comes to markets, it's like I tell people, I'm no longer I started out trading bonds and sugar. I've traded S&Ps. I've traded currencies for years. I mean, by nature, I'm a bond trader and a sugar trader. That's what I started with. But I trade currencies the most, even though I still trade interest rates, but each one you trade in different levels. Some I trade on longer term, some I don't trade for months or days, depending on what it is, and some I won't even trade for a couple of years. There's currency crosses that are big that I don't touch. There's some euro crosses I haven't touched in a while, but when the opportunity is there, I do. All traders buy and sell numbers ultimately, and that's what I tell people. I'm a trader. I trade numbers. I don't care if you call it Treasury bonds, Euro US dollar, British pound US dollar, Swiss franc, Japanese yen, Monero, Bitcoin. I buy and sell numbers. So I look for value. I have targets. When I'm buying numbers, I have a target value to the upside. I know what my risk is to the downside. I stick to that. If I am a seller, I sell at a level. I'm looking to buy back eventually at a certain level. Well, except for options, which expire. That's a different story. Sometimes I look to sell and never get out, and even buy and never get out. And those are options. That's the only time. Otherwise, I have a target. Even when it comes to stocks, even in my retirement, except for some dividend payers that I used to hold, that I don't anymore because they're not paying what they used to, and they're definitely not going to anymore. Dividends are going to cut back, which is also going to rock the market. That's why I'm in cash. I'm waiting for the nice opportunity to start to buy in, because blood is not in the streets yet. When blood's in the streets, that's when the money's made in the stock market, baby. So right now, trade the currencies, buy and sell numbers. That's what I do. So XMR US dollar, we had a nice view of that. Let's look at one more crypto before we do one last wrap up with the Forex markets. Dogecoin USD, look at that at 8 cents. Flatline. What does that look like? It looks like a Bitcoin chart that we looked at just recently. It looks like the Ethereum chart that we looked at just recently. What doesn't it look like? It doesn't look like the Monero chart. Wow. I guess of the, let's see, we looked at 4 different cryptocurrencies. We talked about a couple other with our guest chiming in here on this chat, which thank you once again. We found the one that's not a Ponzi scheme. Does it mean there's no malfeasance in the Monero sector? I wouldn't say that. But as far as whittling out which markets are tradable, well, I'll tell you what. Right now, Monero is the one I would be watching more than any of these other ones, because it seems to be not caring about what's going on in the crypto space. What does that tell you? Oh, wait, that's right. Monero is used for payment systems around the world. Their technology has been embraced, and they're still using it. What do you know? What a great idea. Bitcoin, what's it used? What is it good for? Buying and selling some goods and some things, but how many retail operations now want to still take Bitcoin? You have to sell it right away, and it goes down pretty quickly right now, doesn't it? So as soon as you sell your goods in an inflationary environment, the currency you buying is devaluating as you hold it. The dollar has been going down as far as purchasing power because of inflation, but not as bad as cryptocurrencies. So there's your argument for against cryptocurrencies once again. But it's a trading device. I've mined, I set up miners, I've dealt with technology and sold technology in the space. I've taken payment in coins, and that's how I'm dealing with house money when it comes to my investment in the crypto space, and I have made money off of it. I'm happy with that. I'm grateful for that. I have been diminishing except for charting and giving analysis on it, my activity in the crypto space has been diminishing with the people who I was involved with. One of the main reasons is that they were all great while things were going up, and now they've all disappeared. I don't know where they are, half of them, and what they're doing. So I think they're all sitting in front of their screens being like, okay, it's going to go back up, right? It's going to go back up, right? You told the whole world this is the future. You know, I know a lot of people that, especially, and I feel bad for them, that they don't even buy in the stock market, and they started investing in Bitcoin and cryptocurrencies basically last fall and last summer, and even at Christmas time, and now they're like, so it's just bouncing, and now then it goes up and makes a higher move high, right? I'm like, well, we'll see. We'll see. Okay, you're welcome. Appreciate it. You're not stealing time. Our interaction is exactly what this is all about, and our call on clarity will be between us, and that's private. It's about your trading, not about the questions you're asking and the things we're talking about. I'm sure are things that viewers and people that watch these videos later will enjoy the interaction, especially because they're fantastic questions. Really good. So you haven't been eating up my time. Please come back again, and any other videos I have, leave comments on them, and I look forward to our call on clarity, by the way. And Gary, also for your input today. The book came on Monday, only on page 1, page 8. That's great. I hope you enjoy the book. And Gary, interact with us on the videos, and we can compare signals and stuff that's going on as well. So yeah, thank you very much for your time, both of you, for interacting and for subscribing and passing, whatever, liking us on YouTube and Twitch. And let's see. So once again, we're going to take a real quick look and see where the US dollar JPY is. Okay, we're looking at this one. This is came back a little bit, all right, but still it's doing well. It's strong on the day. And let's look at the euro. This is the one we're waiting for the signal. Remember, as of today, now remember I said wait until the end of the day. It's no longer a bearish engulfing line. Doesn't mean it may not set up a short-term mini weak sell signal, but we'll see. Right now, ain't happening. That's why you wait until it happens. Don't get in front of a trade just because all of a sudden a bearish engulfing line sell signal is there, but it hasn't closed. It means it's not there. It's an illusion. Just for a short time it's there. If it would close, remember I said if it closed for the day right there, then it would be it. Now we're coming back. So we need to have a little bit more of a sell-off over the next hour and a half, couple hours to confirm that sell signal. If not, we don't have it. And then guess what? Challenge of resistance. So remember those low risk sells I was saying? That's why it was low risk. You only had a little bit to risk, and most likely if you didn't get the signal, we're going higher. We're making higher move highs and higher move lows. The trend is your friend, my friends out there, no pun intended. Remember, forex-trading-unlock.com. Check us out there, and under products, courses, and services, go to high probable Japanese candlestick patterns and check out our video and also our book. Preview it, share it, buy it, like it. We would really appreciate it. And once again, also, when you're on our YouTube and Twitch channels and whatever, leave comments, and also we would really appreciate it if you would like it, and definitely share it with your friends, please. Let the community out there know that we are here for Forex and cryptos and other markets too. Check out our YouTube playlist. There's a lot of information that we have done with eoption.com, the Nadex, a couple other companies, and once again, spend your time with getting your Forex information at forex-trading-unlock.com.